Let's talk the market fundamentals with Punita Kumar Sinha. She's, of course, the managing partner at Pacific Paradigm Advisors. Hi, Punita. Good to be speaking with you. What do you make of the market setup right now? Nifty is a bit, struggling around that 20,500 mark. And there are people saying that, pretty much we've made the top of the year, maybe another 4-5% move, but that's pretty much it. Don't have high expectations from the market for the year. Would you concur?
I would say I think it's going to get very selective, unlike last year where basically all stocks really ran. This year, there's going to be much more focus on earnings, valuations, because we are entering into an election year across the world. So there will be quite a few changes based on who wins, especially in the US. And that could have, ramifications for global trade. So I think that has to be kept an eye on. But in general, I think given where valuations are for most markets, one has to be more selective. One has to be very focused on the underlying fundamentals of the companies, and therefore earnings become very important. We are heading into the earnings season, so I think it's very important that we analyze the earnings and then base our investments on the trends that we see. I don't expect earnings to disappoint for the most part because I think the India growth trajectory is still very strong. So I'm not so concerned, but I'm sure there will be winners and losers.
Punita, hi, morning. Good to speak with you as always. Just wanted to understand, overall at a macro level, what is it that you're making of things right now? And more importantly, how central banks, both the FOMC as well as the RBI, are likely to move. Given that you've got once again the irritant crude, haunting us, we're already sitting at $91 per barrel now.
Yeah, I think it's interesting. I mean, the growth has been a little bit soft, particularly in the US, but inflation remains sticky. So that's what's really creating some uncertainty on interest rates. Earlier, there was an expectation that interest rates would come down faster this year because inflation was looking like it was ticking down. But now, with the latest data, it doesn't look like that. And so many rate cuts may have got pushed further out. And that could, create a little bit on a cap on markets because markets have moved in anticipation of rate cuts. So even in India, I don't expect rate cuts to happen anytime soon because I think that the growth is fairly strong, other than pockets of rural India, which is weak. So that's what the governments around in India have to balance is rural versus broader growth in the economy and whether they want to give any kind of stimulus to the rural sector.
Punita, morning. How are you playing, some of the capex-linked sectors and those that are closely linked to the growth in the economy? Do you believe that there is momentum upside, especially in light of the fact that it's the election year?
No, absolutely. I think it's not linked to election necessarily. It's linked to the India becoming more of a developed market and the goals that we have 2050, 2040, and the years ahead. And if we have to achieve those economic goals, investment in infrastructure is critical. And so all policymakers, I think, are going to be focused on making sure that infrastructure spend in India continues. As a result, there will be capex that will have to happen both in the public sector, which is the government, as well as private sector. And that's going to require funds, whether it comes through secondary market issuances, whether it comes from loans. So there is going to be buoyancy as a result of that. So anything infrastructure related, of course, governance in this sector has always been an issue. So we have to focus on making sure that the companies that are going to benefit from this have the best governance in place and that they're able to fund the growth. But I think government capex will continue as well. And so this is a space that I think evaluations, you have to keep an eye on valuations, but broadly that I think will continue to grow for the next few years in India.
Okay, so infrastructure is something which is a structural story. But do you think this uptick in metals is also a bit structural in nature, or again, these are just those transient which is difficult to trade from a stock point of view?
No, I think growth in obviously commodities, metals in India in particular, steel, it's linked to the growth story of India and the demand. And there have been points, there was a point where the global steel prices were higher than Indian steel prices. But that also Indian steel prices have over, this kind of growth sometimes gone higher than global steel prices, indicative of the fact that the demand for steel and other metals remains strong because of the infrastructure story. So, and if you look at the capex plans of a lot of these steel companies and the metal companies, they have pretty aggressive capex plans to keep up with their market shares and the growth story of India and seeing the demand potential. So the focus for many companies, and not just for metals, whether I look at pharma, whether I look at metals, whether, most of the companies who were focused on global growth are now realizing that the India growth story is going to be far more exciting. So there is also a thrust to invest in the India growth story and the India demand, and therefore, there has been a reallocation of priorities to some extent, and India is going to drive a lot of even the steel or metal prices potentially in the future.
Do you think that owing to the kind of indications that we have been getting from some of the financials in particular with respect to their Q4 updates, that by and large there's more legs to this rally?
I mean, I don't know about the rally in the markets. There's more legs to the growth story for sure. But the rally depends a lot on valuations. And I think right now the earnings season is ahead of us, and we're going to start seeing earnings actually next week. So we'll have to watch for those. Companies that are going to disappoint even slightly are going to see their stocks getting crushed because valuations are high. But companies who report in line or even exceed a little bit are going to see a rally in their stocks. So I wouldn't necessarily call it a broad-based rally, but I think it's going to be selective. I do think that momentum is still very strong, basically from the retail investor, and the flows continue to remain strong. Indian investors, frankly, don't have a place to invest because of capital controls other than in India. So as long as the wealth creation keeps happening in India, more money will flow to equity markets that will support high valuations for some time to come. But it will have to be, the companies will have to deliver. I still see this momentum kind of driving up the mid caps as well. There will be a lot more issuances coming up. As you can see, there's a pipeline of issuances, which will provide new stocks and sectors to invest in. But will also keep a lid on the broader market if there's so much secondary market issuance. So I would say, yes, markets could remain buoyant, but you have to be very selective because there could be a lot more volatility this year as compared to last year.
Okay, point taken. Volatility is something which is going to be the case this year, but yes, selective growth is something that might augur well. But we're just at the cusp of the earnings season, Punita. Which is the sector that you think could be the dark horse, wherein the expectations are low, but it's probably there are tailwinds available that it might outperform, or what could be the big disappointment?
I think across all the sectors where the expectations are low still are the IT sector. I don't see much changing on the IT sector earnings front this quarter because based on whatever anecdotal evidence we're seeing, the hiring is still quite weak. And so I don't expect that this quarter will be suddenly a change in trajectory for that sector, but that's a sector to watch because that's the one that has been the most out of favor, I would say, last 1 year. The other sector that has been a bit of on the back foot has been the FMCG sector, where rural growth has been weak, and therefore that sector has been negatively impacted. But with elections around the corner, typically, there is a lot of rural spend around elections. So temporarily, that sector might get pushed. Although that this quarter, that may not be visible because election spend hasn't really kicked in. That'll kick in more in April and May. So that may impact the next quarter to some extent.
Sure. And would you say that, Punita, we are safer in large caps as opposed to small and mid caps? I know the debate has been on for months now, and clearly the appetite is humongous for the small and mid caps still. But would you say there's more value on the table and slight more valuation comfort when it comes to large caps, of course, selectively?
No, I agree. I think there is more valuation comfort in large caps, and even the two sectors that I just mentioned, IT and FMCG, which have been the laggards in a way, those are all mostly in the large cap space. So the large cap space definitely is where the valuations are still reasonable, and but again, where most of in IT, FMCG, and some of the other sectors where growth hasn't been as strong as in some of the other names. So if there's any improvement in growth, that sector would look relatively attractive. As I said earlier, Indian investors don't have the ability to allocate across geographies. So they really can only allocate between large, mid, small caps in the equity space. So that shift based on valuations and growth between large, mid, and small will keep happening because that's the only place that can really, frankly, rotate.
What's the view on hospitality? Because that segment has been growing quite well over the last 12 months. And I was just speaking with a whole lot of industry experts yesterday, and all of them are saying that domestic leisure is the big lever and it is not going away in the next 5 to 7 years.
No, absolutely. I think the hospitality sector and even real estate for that matter are two sectors where the domestic demand for upgrading lifestyles is going to really benefit these sectors. And tourism has definitely going to pick up. And as our Prime Minister has really been also mentioning that, he's been promoting tourism, more wedding destinations in India. So I think there is definitely, and for many years in the last decade, there hasn't been a lot of capital investment that has happened in the hospitality sector. So I think this sector is definitely going to see a lot more capex, a lot more demand, and we will see rates also rise for hotel rates, etc. So this is a sector definitely that is going to have good secular, metrics in place for sustained growth for the next 5 years.
Okay, Punita, on that note, we'll let you go. Thank you so much for joining us today.
If you like this video, then like, share and subscribe to ET Now.